So we are back again, Matt Piepenburg and myself, and Happy New Year to you, Matt, and Happy New Year to all our listeners and viewers.
Of course, yes,
Uh,
Happy New Year.
yeah.
Quite a year starting off already.
That is just unbelievable. Not that we haven't forecast this, you and I, Matt. But the mess is just getting greater. But for years I've been talking about social unrest. And it's happening. It's happened. It happened in the summer in the U.S. It happened all over Europe and France, etc. And now, can you imagine actually that the Congress has been taken over by a riot mob? So it's just unreal. And sadly, as we have been saying, I think this is the beginning. It's going to get worse. Now, markets are, of course, ignoring all of this. Stock markets are at or near the highs, and gold market is going the other way with a bit of intervention that we will talk about later. But the risks are at an absolute maximum, and history tells us that this is not going to end well, Matt. So what do you see now? What do you think people should look at?
Yeah, I'm looking at really, Egon, three themes right now. It's kind of history repeating itself, but it's a fundamental and historically confirmed misunderstanding of three themes. Really, a misunderstanding of risk, a misunderstanding of inflation, and a misunderstanding of debt. And what we've seen in the last weeks, beyond just the crazy political climate, which is no surprise given the financial climate, is money is chasing risk again. There's very little money in cash. You're seeing massive inflows into names like Bitcoin and out of safe names like gold. We had a 7 billion outflow of certain gold ETFs and a $2 billion inflow into Bitcoin, which we won't get into the details of how Bitcoin and gold are so very different and yet similar in certain ways. We also saw just risk chasing in names like Tesla. Again, that's a metaphor for a lot of risk assets that are just so overvalued. To me, Tesla was $200 overpriced years ago, but that doesn't change the fact that it could still go to 1,200 today. Nothing surprises me. It reminds me a great deal of the dot-com bubble and names like Juniper and Yahoo and Microsoft and Cisco. So that isn't a surprise, but it's just a further indication that people ignore risk when they're chasing tops in a crazy needle like this. At the last gasp of a needle market, there's a desire to get rich quick, and we're seeing that psychological kind of avoidance of risk and focusing only on reward happening. Bitcoin, again, real quickly, you're seeing 10% moves in a single day. The price doubled in 2 weeks. Millionaires are being made overnight in Bitcoin. It's very hard to compete with that.
But you saw the volatility in the last few days. I mean, it was up to 41,000, and then it dropped to 31,000. Now it's 35,000. Can you call that an investment, Matt?
No, that's precisely why Bitcoin is not the true comparison to gold. Gold has not made those kind of 5x moves in a year, and that's why we like gold, because it's not that volatile. It certainly is subject to price swings and retracements, but it's a slow and steady, much more directed way to preserve capital, we've talked about before. But it's precisely the kind of volatility we're seeing in Bitcoin that makes a comparison to gold almost comical. But, again, we won't get into a Bitcoin discussion today. But another thing that I see happening right now is fear of inflation has been completely muted. First of all, I think inflation, as reported, is so fictional that we know there's higher inflation. We know inflation is tied to the money supply. The money supply is crazy. With
Yellen, sorry for interrupting, but you see, we can see just what happened to food prices this year. Food prices since earlier this year are up somewhere in 45%. When I'm talking about commodity prices on food, the wheat, the soya beans, etc. Based on the S&P GSI commodity index, agriculture index. They're up 47% this year. Inflation is already here in many areas, man.
We just whistle past it, but the scale used to measure inflation will ignore in how they weight those prices, and they'll focus on things like TVs that are cheaper than they were 10 years ago. But the truth is, it's the CPI scale is like a scale at a fat camp that doesn't measure beer and chocolate and pizza. They just ignore those things that actually, you're gaining weight, but they tell you you're losing weight. We know there's inflation, but they tell us it's still around 2%. It's absolutely disingenuous. But with this lower fear of inflation, even the jobs report came out on Friday when gold took a hit, and the jobs report, which was expected to be great, showed 140,000 less jobs. So there was less fear of inflation, less fear that gold was necessary. So there was a gold tanking, and there's a lot of reasons why gold retraced. But the fact is, money printing is going to come in the next 4 years in spades. You've got Yellen, who's gone from the Treasury and from the Fed, who's now being asked to be the Secretary of Treasury. That is a classic sign of marrying the Fed with the Treasury, getting deeper and deeper into bed with the Fed and the Treasury. There's no point in even debating whether or not the new administration is going to have to print more money and deficit spend to get us out of this mess. And they're going to do that, continue the same game. So inflation isn't understood. People aren't afraid of it yet, although it's happening right before their eyes and just being misreported. And the other thing, of course, Egon, is debt. Debt is completely ignored in the headlines and even in the FOMC meetings. They whistle right past that graveyard. We've got a $27.7 trillion government debt right now. We've got 80 trillion combined household, corporate, and government debt. When that bond market or that credit market has its uh-oh moment, where do you think the trillions of dollars are going to go? Are they going to go into Tesla and Bitcoin? They're not. They're going to go into hard assets and commodities and precious metals. So in the long run, for those who understand inflation and understand debt and understand risk chasing, they're going to finally figure out that you've got to go to the safer assets, of which gold, of course, and silver are clear choices. But again, this is nothing new in history, Egon, these cycles. And I'd like to get your opinion, reminding us and ourselves and our viewers about history and about what history confirms, these patterns. We know what Biden's going to do. We also know that bullion banks and the BIS interfere in the price of gold. That's not a tinfoil hatted theory. It's a fact. So I'm curious what you saw in the last few weeks in those areas and what your thoughts are on that.
Yeah, the older I get, and sadly I am getting older, as you know.
Me too, Egon.
Yeah, you have a bit to catch up here. But nevertheless, the more experience I have, let's say that, then the more I understand how important history is, and the world doesn't understand that. The world always thinks that it's different today because we are here today. It's different. We have computers, we have Bitcoin, we have new money. It's all of that. It isn't. And just take for example the debt. I wrote an article in November 2016 when Trump had just been elected, and I said, I showed first of all that since Reagan, and you can go back further, since Reagan, U.S. debt had doubled every 8 years on average. So that is the easiest forecast to make. So I made the forecast when the baton was handed over from Obama to Trump in January 2017. The debt was 10 trillion, and I said, sorry, the debt was 20 trillion. Sorry, the debt was Obama inherited 10 trillion and he made it to 20. And then I said the debt in 8 years' time is going to be 40 trillion. And the in-between figure in January 2021, when the first Trump's period runs out, the debt is going to be in-between point is 28 trillion. So here we are, as you just said, we are now at 27.75 trillion. So, that forecast I made over 4 years ago, and I'm not a genius at all, but it was so easy. And that trend, so I've said that in the next 4 years, I said at the time, 2016, where we're going to be at, or the US is going to be at 40 trillion. That's not going to be anywhere near enough, because now Biden is going to start with trillions straight away. He has to. And there may be packages to the left and to the right and to the center. Everyone is going to get money, and big money. And then I still believe that we will have problems in the banking system. We will have problems with derivatives, etc. And of course, social security and pensions and all that, unfunded liability. So Matt, we're talking about probably a lot more than 40 trillion. It could easily be 100 trillion once inflation starts. So that's the extent of what the Biden administration is going to do, because they have no other option, and we knew that for the money printers, for the people who believe in money printing, they are a dream team, Biden and Harris. So that's what we're going to see, and of course, you and I have written about it for years. About you go back to the Roman times and In the 3rd century in the Roman times, when the value of the denarius, the silver coin, the silver content went down from 100% to 0% over a period of 100 years. That's what we're seeing now also in today's market. I just looked at recently Henry VIII, for example. I mean, he also debased the currency totally. And so it happens in every period in history, and we are at the final phase of it now. So we know that that's going to happen absolutely with certainty. But you mentioned the gold market also, and the intervention is blatant, Matt. So we had gold went up to about $1,960 about a week ago, or a bit more. And then they pushed it down to just in the 1900s, 1905. By 1905, it was Friday morning at 9 o'clock European time. We were 1905, and then exactly at 9 o'clock they just hit it with 1.4 million ounces of paper gold dumped onto the market by the boys, which means BIS and the bullion banks. It can't be anybody else. You're dumping in one go 1.4 million ounces, which is 43 tons, which is 2.5 billion, let's say. No sane trader in the world would do that, Matt, because he would be fired the same day. If you want to actually get rid of some gold, then you sell it gradually into the market without pushing the price down. So this was clear manipulation, obvious, because basically the bullion banks are too short gold, and they need to get the price down to buy it back cheaper. And that's why they're pushing the price down. And we see this time and time again. We saw it between 2013 and 19, when they actually kept the price below my what I call Maginot line. And that's going to continue, but they're not going to succeed. And that paper market is not going to take this manipulation in the long run, because you're going to have so much more money issued now. And I see COMEX in the next few years easily failing. So we know what's going to happen. We know that, and this. I mean, I really don't believe in the reset either, Matt, because I think markets will collapse before the reset, before they have any chance of, as some people believe, taking over control of the whole of the world system of money. I think it will fail just by the sheer weight of the debt, as you outlined.
It won't be an orderly reset. And look, as you said, the debt that we have no choice but to continue to print money to monetize is getting further and further out of control. And how are they going to pay those IOUs? They're going to print money. And when you print money, you create inflation by money supply, and you debase currencies. What is an antidote to debase currencies? We know the answer. And again, it's very almost simple, stupid. It's common sense, but it's being ignored by a great deal of noise and a great deal of headlines in other areas. But people are walking right past these simple drivers right now. They're just walking right past them.
And as I said in a recent article, Trump doesn't realize it, but he was the luckiest man in the world not to win this election, because
the next administration will be blamed for it.
For everything, and Biden, or whether he lost the course or not, or Harris will become president in the next few years, who knows? But nevertheless, they will preside over such a mess that they wish they'd never been there. And therefore we back to our old protection, old wealth preservation. That's people have to think about. If you're going to lose your whole of your wealth, and if you don't actually now think about protecting the assets that you have, and protecting your family, and helping the friends around you. So, Matt, we will have a lot to talk about in the next few weeks and months. So this will be one of the most incredible periods in history, in my view, coming now the next few years, and even this year, I think so. So let's finish today, and we'll be back soon again.
All right, talk soon again.
Good to talk to you.
Okay.
See you soon. Bye-bye.